Welcome back to Decode Finance, where we unravel the complexities of personal finance to empower you with knowledge and insights. Today, we're diving deep into a topic that impacts everyone: inflation. Let's decode how inflation affects your finances and what you can do about it. Today, we're discussing the often misunderstood yet crucial concept of inflation. So, what exactly is inflation? Simply put, inflation is the rate at which the general level of prices for goods and services rises, resulting in a decrease in purchasing power over time. As we can see from this graph, inflation is not a new phenomenon. It's been a part of our economy for centuries, but its impact on individuals varies depending on various factors. Now, let's delve into how inflation affects your finances. One significant impact is on your savings and investments. As prices rise, the value of your money decreases. This means that if your savings are not growing at a rate equal to or higher than inflation, you're effectively losing purchasing power. To illustrate this point, let's compare the inflation rate with the growth rate of savings. If your savings are not outpacing inflation, you're falling behind in terms of real wealth accumulation. But fear not. There are strategies you can employ to mitigate the effects of inflation on your finances. One such strategy is investing in assets that historically have outpaced inflation, such as stocks, real estate, and precious metals. These assets tend to appreciate in value over time, providing a hedge against inflation and preserving your purchasing power. Another important aspect to consider is how inflation impacts your borrowing and debt. While inflation erodes the value of money, it can also reduce the real burden of debt over time. If the interest rate on your debt is lower than the inflation rate, you're essentially paying back your debt with cheaper dollars. However, it's essential to be cautious and not rely on inflation alone to reduce your debt burden. Responsible financial management is key to long-term financial success. So, what can you do to protect your finances from the effects of inflation? Here are a few practical tips. First one, diversify your investment portfolio to include assets that have historically outpaced inflation. Second, consider investing in Treasury inflation-protected securities, TIPS, to safeguard against inflation risk. Third, keep an eye on your expenses and adjust your budget to account for rising prices. Fourth, explore ways to increase your income through side hustles or career advancement opportunities. By implementing these strategies, you can navigate the challenges posed by inflation and secure a brighter financial future for yourself and your family. That wraps up our discussion on inflation and its impact on your finances. Remember, knowledge is power, and by understanding inflation, you can make informed decisions to safeguard your financial well-being. Until next time, stay financially savvy.